we do have a short signal coming in on the 8th of September. And again, yes, that name is subject to change. Maybe Parallax is a little silly. I kind of like it, so, you know, and I made it, so whatever. 8th of September, we do get the short signal from Parallax, and it does keep us short, not giving us any flipping. Now, of course, we did notice over here that it will take a little bit of inverse momentum for it to flip, for it to flip direction. That is a very M1 Lanchy. I think I got that right. Thanks so much for the sub on YouTube over there. Welcome to the community. Now, here's the thing. When we're looking at Bitcoin's price, I'll just give you guys an update on what I did last night at the daily close. I did go ahead last night and I closed my Bitcoin short. So my full risk short is now completed. I was able to capture a little bit more than 50% in profit, actually, of this overall movement to the downside. And that's because of scaling out. As I've said, you're never going to realistically capture the breadth of a movement, and that's okay. As well as EOS, I was also short on the dollar pair for EOS. And now, I'm not saying that I think we're going to bounce from here, but there are several things that I just think it's probably a logical area. I looked at the chart, I looked at everything that's going on, and I felt quite happy with the profits that I had gotten from this. And I do feel that it is time to go ahead and scale completely out of my BTC USD short. Now, I am still hedged, so I still don't have any long exposure. I don't think that it's appropriate at this point in time to be picking tops and bottoms. As you guys know on this channel, I do not like picking tops and bottoms. I think that that is the worst thing that one can do. And while there are reversals that I will trade, they are not the types of reversals that you have probably been led to believe are the profitable types of reversals. You do not pick tops and bottoms. When you pick tops and bottoms, you are entering into manipulated waters, right? That is the realm of scam wicks. That is the realm of very tricky money management, because the propensity to have one stop loss hit becomes very problematic. So I don't like to pick tops and bottoms. There are reversals that work better than others. Don Candon, thank you so much for the 20 crones, my good friend. And he says, howdy, looking all gussied up today. Just for you, baby. I put this on just for you. It's actually been a while since I wore my HODL shirt, so I wanted to wear the HODL shirt right here and just kind of convey the idea that even with all of the negative price decline, still very much a strong believer in Bitcoin. I do have a lot of conviction that we will see much higher Bitcoin prices, given the market plenty of time to work itself out. As an investor in Bitcoin, as an investor in a few, with many exceptions, but few other cryptocurrencies, I do have quite a lot of faith in this industry. Otherwise, this would not be the Breaking Bitcoin show. This would be the Breaking Precious Metals, Forex, and Stocks show. Almost felt like the need to say Bitcoin in there for some reason. Right. So anyways, by the way, let me know how you guys like the intro screen. I did make that this morning, so positive reviews are helpful. Anyways, so I did close. I don't have full risk exposure to the downside. I'm still hedged. So if price does move down, I won't lose any money. I just won't make as much money as I would like to. Now, I think it's probably the best to start off today with looking at what our indicators are saying. So let's go over to Minx, of course, first. And we can see here that on today's candle close, Minx will be curving back up into static. This is going to be an early exit signal. So this does justify my decision a little bit. Of course, I did pull the trigger a little bit early, but Minx is now confirming that movement. Of course, when we do move from below the static level into the static level. So when we cross the noise line, when Minx crosses the noise line, that is going to be an early exit signal. That is telling us there is a good potential to see converse movement. In this case, that would be movement to the upside. And of course, I'm not really taking the wicks into account I know a lot of people are looking at that. Obviously, what do we see when price is at a low bottom area? We often do see a lot of wicks. But the reality with that is you see a lot of wicks anyways with Bitcoin. You see a lot of wicks anyways with Bitcoin. So I don't really think. And why do you see a lot of wicks with Bitcoin? Because of volatility. Because it is a low overall compared to other assets. It is a low liquidity asset. So there's just literally no way to get away from the wicks. It's impossible to get away from the wicks. Now, we do have still from Wada Atar Explosion, we do still have negative momentum to the downside. So this is still telling you you're good to go. Volume is okay to the downside. So should we get another signal to the downside, a continuation signal, what would a continuation signal be like? Well, that would happen if this line right here goes from up here to back below the static level. So something like this, if Minx does cross back below the noise level, then that is going to be a continuation signal, and I would be looking to reshort, because that would be, for me, a movement a little bit lower, down to that $7,400 or potentially even the $6,400 level, as I've talked about. Now, I don't want you to, looking at the daily chart, I do have this line right here, this upper green line, that has nothing to do with daily support and resistance. That has nothing to do with daily supply and demand levels. So that is, of course, I was plotting out the intraday trades here on the 15-minute time frame right here, and I was plotting out the median of price action. And down here on the lower time frames, we can actually see a few things here that I'm going to kind of reference here in just a little bit. We'll get back to that here in just a second. So back to the daily, the only lines here that I think are germane to talk about at this point in time, when looking for bounce targets, are going to be, of course, that 74.32. We did talk about that at length yesterday. Why is that an important area, or why is that significant in any way, shape, or form? Because it is a logical long stop loss area that is also, if we look back over here, I would say the median of price action during the 2018 flooring phenomenon, when we did find that bottom, the floor of price action in 2018 at around the $6,000 level. So I'd say that 7,400 is a good median for that. And so medians are obviously important when we're looking at reversion to the mean strategies. And we can see the import of that. Of course, we talked about this. Now, it did only occur on one daily candle, but in 2019, when we rose, when we began the bull market in 2019, this was really the early stages of the bull market. Of course, this is going to be May. This is after the significant breakout candle on the 1st of April, but really the next significant bullish movement. We did hit that line right at 74.32. You can see that right there on this candle on the 10th of May. We did hit that. We did have a little bit of initial rejection, and then we broke it. That makes that area a bullish breaker, and we do have confirmation if we just scroll over here. Sorry, let's just zoom this out a little bit. And we can see that breaker territory actually is coming in from that 74.32 to about the $7,270, maybe $7,300 region. So that is going to be your breaker zone. We've talked about breakers before. Make sure to be a regular viewer for more information. Now let's make sure that we're autoed. Okay, so I think that that's an important level, and really you guys know that I'm not the biggest fan of trading in this method, but when we're looking for support in a parabolic movement, it's very difficult. So we really don't have a lot to select from here. And as I said, you don't want to be calling tops and bottoms. You want to be identifying key areas of supply and demand, because Bitcoin as an asset does respond to supply and demand. And it's not, it's not something like the FX markets where it's just completely prone to manipulation and there's no such thing as supply and demand. But we really have slim pickings when we're looking for bounce targets here on our higher time frames. And again, so 74.32. Logical stop loss area. It's where price has bounced around before. We did break through that area, retested as support once, not twice, and then kicked off for the last parabolic movement of the 2019 bullish ascent. So I think that's a logical area as well. And you can just see anytime I see something like this where I have a lot of lows that have not been raided. So as you can see here, here's the raid, right? And really, it's not even a raid because there aren't stop losses placed here. This is more of just, a highly volatile retest of that support level. We break and then we retest and we end up closing right around that level. Spend one candle below it, but again, we're still in that overall breaker territory. I just don't have the lower green line there at that $7,200 area. You can see that we actually don't close below 7,200 on that candle. We closed around 72.58. The low is actually 72.05. The low is 72.05 on that candle. But then we're right off to the races. We have one brief fake out, we come back, bounce off that level, and then there we go. All right, so I think that's the first area that I'll be keeping my eye on, 74.32, seeing if we can get a bullish reaction off that level, and then of course kind of waiting for a good reversal signal, or at least, and then a little bit further out, maybe looking for but definitely looking for a trending signal. So that would be my primary indicator, giving me a trend signal, because trending trades are always the best to take. And that's going to probably take a while, because it's going to take a little bit for Wadatar explosion to flip bullish again. And I'm going to need to see that to be taking a trending trade to the upside. Again, it's very difficult to be bullish on Bitcoin at this point in time. And as I said, calling tops and bottoms is not the way to go. Calling tops and bottoms is not the way to go. Bitcoin moves with such volatility that you don't have to take the risk of attempting to identify tops and bottoms. It is a fool's game. You're not going to do it. Nobody does it with even a close level of accuracy. Not for a very long period of time. And when I say everyone, I mean that 99% of people. There are going to be a very small percentage of people out there, and I've met maybe 2 in my entire lifetime, who have a just ridiculous ability to actually call tops and bottoms. And this channel is for people who want to realistically trade and did not grow up in Montessori. So, and I really don't think that it's has anything to do with intelligence. I think that there are just a few people who are naturals and all kinds of things. And again, I would assume that would be naturals at predicting the future. So maybe we need to hook them up to something like what's Cerebro. We found the Charles Xaviers of the world. Now, moving on. Beyond that, looking beyond that, I don't see any support until down in the $6,000 area. And I've made the case for that multiple times. That's obviously our point of control on VPVR. And of course, that is going to be the floor of the 2018 consolidation period, right? And interestingly enough, I think that there is quite a lot of significance. You will find in cryptocurrency that often where wicks go is very telling of where price wants to go. And that wick that we had on that candle that I just observed here, where we do end up breaking on this candle above that order block and then come down and test that zone, that wick goes all the way down to 61.78. Wicks typically tell you where price wants to go, or where there's very large iceberg orders sitting in the order book, whether they're hidden or not. And typically they're hidden. That's why they're called iceberg orders, because you only see the tip of it. Very similar to my dating life. Now, moving on, we have that, again, that's 61.78. We have that high volume node coming in right around 6,400. So I think if we do end up violating the $7,400 area, then I don't really see price stopping until the $6,000 area. So that will be, I'll obviously be getting a trending signal to the downside or a continuation signal to the downside to re-enter into more short exposure at that point in time. But as it sits right now, you have to know when you've gotten a good thing, and obviously hitting about a 20+% trade on Bitcoin is a good thing. Hitting a 40+% trade on EOS is a good thing. You have to be happy with that. Time to close out, take profit, and wait for the next movement, because again, we've seen the slowdown of momentum. The other thing that is influencing my decision, as well as the fact that we are moving into the weekend. Weekends are typically quite bullish for Bitcoin, and I just don't really feel like sitting through the drawdown, and I'll wait until Sunday evening until the CMEs open back up, until the Forex markets open back up, because that's typically when we see movement. Because there's something that we need to talk about, and I don't think we talk about enough. We are trading, and because where's the best place to start with this? I thought I was married. No, I am not married. I am a single human person. I'm a single father. I am not married. I am a single father. All right, so welcome to my life. Now, stop. We don't talk about this enough, and I think this is really, really, really important to talk about, because maybe this is something that you've never considered before, and this is probably going to be because you've never traded FX markets, foreign currency markets, Forex. And so when we talk about trading Bitcoin, people assume, who have not traded foreign currency markets, that you are trading Bitcoin against the dollar, and the dollar is some static entity, some static value, and that Bitcoin always drives the bus, right? So most people assume that I talk to, assume that when they're looking at the BTC to USD chart, when they're talking about price, when they're charting price, when they're taking things into account, that Bitcoin and anything related to Bitcoin, Bitcoin news, Bitcoin events, Bitcoin manipulation, Tether, whatever, that those are the only things that drive price. And I'm here to tell you that that's not true. You have another currency in the equation. You have Bitcoin, which is a currency, and you have USD, which is also a currency. And currencies are traded on the open market and appreciate or depreciate in value. If you want to look at the value of the dollar, some popular methods are going to be taking an amalgamation of what the dollar is valued against all other foreign dollars, and you can just see that rise and spike. If you guys would like, maybe I can make an indicator for that. But I think that I don't think that that's that's just an interesting topic. I kind of challenge you guys with that. I think if you want to be a trailblazer, and I think if you want to have some leading indications on Bitcoin's price sometimes, I think you need to stay on top of the foreign currency markets, and I think you need to stay on top of world events. I don't think that it's necessarily Bitcoin news that dramatically affects Bitcoin's price as much as people think that they do. I think that it is global news. I think that it is equity news that influences price more, because that is when the dollar will step in and drive the bus. If the dollar is now more valuable against other foreign currencies, then you're probably going to see Bitcoin to the dollar move down. If the dollar somehow suddenly loses value, for example, I think Bitcoin did quite well with the trade war between China and the United States. And I think that Bitcoin has largely moved sideways, and you know, to a degree, I do kind of agree with Thomas Lee on this. I think that there is an element here where Bitcoin has moved sideways, largely in part to the equities markets moving sideways. Very low volatility from the equities market. So now, of course, Thomas Lee believes that we are going to see a large spike in the U.S. equity markets, and he thinks this is going to be good for Bitcoin. It's possible, because he is kind of looking at this correlation in a different way. And potentially this is less true on long, you know, so again, let me qualify this a little bit. I think that for the larger Bitcoin movements, the larger trending Bitcoin movements, I think that that is largely tied to what's going on with Bitcoin. But a lot of, I would say, not just intraday volatility, because a lot of that's just market making, but some of the micro swings, and of course contributing to some of the macro swings as well, but to less of a degree than Bitcoin news. I think that the dollar news and what's going on with the dollar is a herald of this. So, you know, I don't think it's a coincidence that you see Bitcoin's price dropping. And of course, there are technical reasons for this as well, but I don't think it's a coincidence that you see Bitcoin's price dropping when Trump is kind of going, you know, when the information is coming out that the U.S.-China trade war might be coming to a close, and that's a lot of strength for the dollar. Of course, you can see the Chinese renminbi to the dollar devaluate because it did revaluate appreciate over the last little bit of time. And ever since the news has come out that the China trade war might be coming to a conclusion, the FX markets have done some crazy shit, especially with dollar pairs. So trading dollar pairs in Forex are always very squirrely. They're the pairs that are the most difficult to trade for whatever reason. Precious metals less so, but anyways, I digress. Just laying low. Stop it. All right. Okay. So moving on from that slight divergent topic, let's look at a few other things. Below the 30 period Donchian, by all rights, one should be looking for shorts only. However, as I said, risk off, because Minx has crossed back into the static level and will be closing that way on this candle, unless for some reason we see a significant down move. And I don't think that that's likely. Moving into the weekend, I think now, obviously, coming towards the conclusion of Friday. So here in a couple of hours, so around the 3 p.m. to 5 p.m. marker, really the 2 to 4 p.m. marker. So probably right at the conclusion of the show, maybe lasting for a couple hours. There is a higher propensity to see some intraday fuckery because that's just how Fridays tend to go. You have the markets, you have the foreign currency markets closing down, you have the CME markets closing down, and all of that occurs on Friday evening. And then they open back up on Sunday and they're closed for the weekend. So no rest for the wicked, because here on the cryptocurrency spot markets, we never get to take a day off. But that's okay. We do take the weekend off for the show because family is important, but we trade 24/7. Well, not 24/7 because, you know, you got to sleep on Sundays. Now, so areas I think to watch for, just to repeat myself, 74.32 and 61.78 should that fail. What do I mean watch for? Well, see if those levels get hit, see if we get some bullish price appreciation off of there, and see if your sensitive trending indicators start giving you a signal. And if so, it's worth throwing the jab for the long. And then when you get the less sensitive trending indicator, you can scale further into a more significant trade. We don't have anything whatsoever signaling along, and we actually don't even have a cross up from our primary exit indicator right here. We don't have a cross up on time transformation. Now we are getting our 4th green dot of life, just letting us know that price is oversold. Oversold is not a bullish indication, especially when you're breaking out of a trend. Typically, that just means, hey, chill out. The direction is to the downside, but you should wait for a bounce. So we'll see what happens. I would still overall be in the mode of looking for this to eventually hit one of these 2 targets, but not in a straight line down. Price doesn't move in a straight line down. Again, confidence on this is about 60-40 right now, but I do think that the more likely scenario is over the course of the weekend and perhaps progressing into next week to see a little bit of consolidation. And listen, what I'm going to draw right now with this marker is not anywhere near what I think price might do. It's just an amalgamation. Consolidation and a little bit of a climb for the races. Now, I'm not sure how high or how strong we will go. Potentially a retest of 9,000, maybe even 9,300. We do have, of course, our 30 period Donchian sitting at 9,341. And so, of course, a movement from 8,000 to 9,300 is valid to trade, even for a trend trader. That's a worthy trade to take. And again, call it what you will, a reversal if you want in that sense, or a sensitive trending indication. Either way, I think that's a valid trade to take. And then we'll wait and see what the reaction looks like off of that level and potentially look to scale back into the short to eventually hit one of these 2 targets. But as it sits right now, low exposure. I don't really like taking a lot of high risk trades on the weekends. Typically, if I do enter into any trades for the weekend, they're low risk. I will say this, altcoins have been holding fairly strong. A little bit of a mixed bag on this over these last few days. Of course, they had a massive drop with Bitcoin, and unlike Bitcoin, they have recovered quite a bit. Some more than others, but majors don't look too bad looking across the board. So I would say that party is likely coming to an end. Again, I think that once we see a bullish move from Bitcoin, and I think it's quite possible that we see a green candle here on Saturday, then all those altcoins are going to lose their gains because they're trading against Bitcoin, and if Bitcoin's price goes up, their price goes down. So I would be cautious on that. I would be looking to take profits on your altcoin trades. If you guys grabbed any reversal trades off of the lows, maybe you're up 5-10% on some of these coins. I would definitely be looking to scale that profit out. Set a trailing stop loss or just move your stop loss to break even. Absolutely. If not, just close out your positions because I think that party is likely to come to an end. And it's not going to be until next week where we get some strong definitive idea of is this going to be a movement back up to 9,300 and then a descent down? Or is this it? Because that is also a possibility. So, as I said, the smartest thing for me to do and what I actually did was just close, wait, be patient, sit on my hands, and, vacuum my house. Ferguson says, Bitcoin has been known to blow right through resistance. Cough. 6K. Cough. This is true. Okay, let's go down to the lower time frames. And we will look at lower time frame price action. All right, so let's take, actually, I think this line is a little stale now, but let's bring up the VWAP and we'll kind of just talk about intraday volatility. Now, the last intraday trade that we talked about, not yesterday, but the day prior to that, we did talk about, we are on the Bitstamp chart here, so I want to make sure I get this right. We did talk about, I want to make sure I get this right. Sorry, yeah, here we are back over here on this day. We did talk about this trade right here. We had pointed out this level right here. I know that's not a very straight line, but we did point out that level right there. And we talked about the 3 targets for that level. Or, excuse me, that was a terrible one. Jeez. Got my hand steady like somebody with Parkinson's. We talked about this target right here. We talked about this target right here. And obviously we talked about where the VWAP chunked down, which is right there. Did only end up hitting the first take profit on that long scalp. And again, not something that I took. Not really something that I'm into right now based on where price action is. But of course, that was a trade. Then we didn't end up hitting the stop loss right here. If you would have moved your stop loss to break even, and we did have some lower price appreciation based off of that. Now, looking at where price is right now, we do have this right here is according to this right there. There are 2 schools of thought on order blocks, and there is the way that I do order blocks, and there is the way that a lot of other people do order blocks. Now, I don't really like that way, but I'll point it out for the purposes of this analysis. This would have been a fill zone right here. Why? Because we established an order block right there. So the way that these order blocks work, the reason I don't like it is because it's very confusing. But the way that it works is like this. So we have a low, and then we try to move up, and then we have a down movement, and that down movement stops. So this is kind of synonymous with my, you have a range. What is the median of that range? We like to see a higher low that does not violate that median. I talked about this the other day in the realm of price action. But this is also, according to people like ICT, according to people like Trader Dante, this is their style of order block right here. So they would have been identifying this order block once they saw it, and they'd be looking to buy anything in that range. And once they get filled, once that level has been in their terms rated, this is where their stop loss goes. Their stop loss goes right there. So if one was trading that style, one would have gotten filled right in the 78.80 to 79.23 level, and their stop loss would be right there, right below this low right here. Again, a little bit below 78.80, maybe around 70, 78.75, give or take. I don't really think that's the thing to do. I think that the thing to do is wait for this range to break. There have been a few profitable trades. If you are somewhat successful at trading this range, of course, there have been 3 to 5% movements. So you're getting on average anywhere from, maybe honestly, realistically, knowing the statistics of most, intraday volatility traders, you're getting on average about 1 to maybe 2% on these trades because you're not catching the bottoms and the tops. But there is opportunity here for intraday trading. I don't really see any good setups that I would want to take just right now, just looking at price action. So I'm going to kind of leave that to you guys. Just looking at this, I think the logical one would have been a long getting filled right here. And where would some decent targets on that be? At this point in time, with kind of this diminished volatility, I think the first target would be right here. This is where VWAP chunked down on the daily right here. And kind of your dynamic level of resistance. Second target would most likely be right here, where VWAP chunked down again. And then I'd be out. And then I would probably be out of the market for that day. I'd consider that a good trade. Getting filled here and taking the trade up is going to give you about a 6% trade, and that actually is going to let you capture the majority of that movement. Of course, you're going to scale out 50% profit here, so your actual profit is going to be somewhere around the median. So maybe something like 4, maybe 5.5% if you're really lucky. Depends on how you scale out. So I leave that to you guys. This is not the intraday volatility channel. This is not the intraday trading volatility channel. This is the trend trading channel and the overall macro direction of Bitcoin channel. And then sometimes me ranting about various topics like the dollar and these darn kids with their rap music. What's better, the hourly chart or the daily chart? It depends on what you want to do. I think that the daily chart is where you want to start. You're going to get less signals, all right? So, and for most retail traders, that's what they want to do. Most retail traders want to be taking maybe 3 to 4 trades a month that have a high probability of success. And you're going to get that on the daily chart. You're going to pay very little in fees. Slippage is not going to be much of an issue. And when you start going down to lower and lower time frames, slippage becomes a real issue. Fees become a real issue. The more you trade, the more you're going to be wrong, right? And you're going to pay for being wrong, right? So you have to, we teach all this in the back testing course. So, it's a very, very careful balance of making sure that your hit rate in live trading is justifying the extra risk that you're taking, the extra fees that you're taking on, and the risk of slippage that you're going to be taking on, because that is a real concern when you get into trading on lower time frames, especially like the 15-minute chart. It's just not, people look at these charts and they see these 3 or 5% swings. It's just not as sweet as you think, man. It's not. It's really not. This is bots and algo territory, man. What's up, JT, my brother? Okay. Generally timeframes that I like, kind of once you become accustomed to the daily and you do want to start getting a little bit more active, if you are looking to spend, to be a day trader, so to speak, to spend, 4 to 8 hours a day sitting in front of your computer and trading, I think you want to start developing a strategy for the 4-hour time frame. Probably going to be the second most popular. Of course, one of our analysts hates the 4-hour time frame. He loves the 3-hour time frame, and he has this theory that you get your signals an hour earlier. I don't know if I necessarily agree with that, but it works for him quite well. I don't really like the hourly time frame. I like the 2-hour time frame. And then I pretty much do not like going below that. I think there is success to be had on the 30-minute time frame, but again, you have to develop your system each tier down, and you have to realistically look at factors like fees and slippage, which once you go below that 2-hour time frame, that becomes a very significant factor. And that is what throws the monkey wrench in most algorithms. So what have we seen here? I talked about this the other day too. What we have seen is that printed low get rated for stops. And this is a concept that I've talked about in other aspects as well, which is to not buy the first bounce. The first bounce is for suckers. Well, really, it's not for suckers. It's just not for retail traders. Because most people, when they buy a bounce and they think they've got a low price, they tend to hold it and have a reversion to the mean type idea where we're going to go back to a baseline or something like that. And on the first bounce, that's typically not going to be true. People are looking for that V bottom, and those happen far less than bounce. Stops get, bounce, retail traders buy, people actually take profit on this movement up like bots and algos, and then those lows get swept. This is typically where you see larger market buys come in, and then price can actually make a movement. And at that point, a lot of retail traders are debilitated and been kicked out. But you can also see successive sweeps and again, because the difficulty here is determining what is trending and what is consolidation and wick effery. And I do want to point out, it's very hard to not notice this. Paralox, which is my new indicator, tells you to go short right here, and has kept you short pretty much this entire movement. Captured literally all of it. Now the daily got you short right around the same time. Daily had you short right here too, but just beautiful. Thank you, Crypto Caveman. Highly appreciated, my good friend. All right, it is 12:48, and that